Hi, David Bassanis here, Chief Economist at BetaShares. This is a snapshot of my latest market trends report. And the theme of the past month, October, was yet again rising bond yields, putting pressure on equity markets. So this has been something that's developed now for the past couple of months. So 10-year bond yields, for example, lifted 0.36% after a 0.46 percentage point increase in the previous month to be up to 4.93%. So almost ending October at 5%. Australian bond yields also rose pretty notably through the month as well, ending at around about 4.92%. So we did see that putting downward pressure on equity valuations, and as a result, the overall global equity market was down 2.7% in terms of total return, and the Australian market was down, had a negative return of 3.8%. And so again, what we're seeing broadly here is situation where PE valuations are relatively high. The so-called equity risk premium of equity markets, i.e. the earnings yield of the market less the bond yield, is pretty tight. And so against that backdrop, this increase in interest rates that we've been seeing is understandably putting downward pressure on equities. Even though the global outlook is broadly improving, corporate earnings are bottoming out and the earnings outlook is starting to improve. But markets did get a little bit ahead of the fundamentals in terms of equity prices rallying since late last year. And now with interest rates backing up, it's obviously put pressure on the markets. A couple of other interesting themes. What we're seeing this time around is the tech sector not necessarily being the hardest hit. So we're seeing equity market weakness more broadly this time around. In 2022, when bond yields were rising, it was the tech sector, the growth sectors globally that were the hardest hit. They are still being hit, but other sectors are also being hurt at the moment. One, I guess, standout area at the moment with both equities and bonds under pressure has been gold. So golds have done reasonably well in the last couple of months, and we've seen gold ETFs such as our global gold miners ETF MNRS showing some positive returns in a sea of otherwise negative returns. In terms of the outlook, I think the bond market sell-off is looking pretty overdone. We do have central banks around the world are close to finish in raising interest rates. Inflation is continuing to come down, I should say, and the risks of a recession globally have diminished. So I think we should be close to the end of the bond market sell-off and maybe close to the end of the equity market correction that's been associated with that. Thanks for watching. More details in terms of this report is available on the Insight section of our website, and I'll see you again next month.